Good morning, fellow traders. Welcome back for Clinton and Josh, our weekly preview of the markets. I think the market has been pretty good to us starting this year. I think last week, our view of analysis on all the pairs we talk about actually delivered the same way that we talk. They are going to deliver them. I think GU play out exactly the same and delivered on the short side over huge. I think 200 or 300 points, and then on the downside, as we were talking, we're expecting price to come back and mitigate this daily fair value gap. You can see we have that daily fair value gap here, and price came to fill it, and now we expect market to go on upper trend, and we have another fair value gap here, and we have some liquidity sitting here on the daily order block, but I think that price is going to go up again. Okay, so we have mitigated the fair value gap, 1 hour fair value gap. That's showing a strong sign that price is going to go uptrend. Okay, so when we come to the 4 hour, let's see where we can have our entries. Okay, so this is it here. That's the 1 hour fair value gap, and as you can see here, price left this 4 hour fair value gap here. Okay, and if you look below that, there is also a 4 hour demand block. So what I want to see, remember last week I explained about the order block. Okay, so if we see here, let's look at something here. There is a 4 hour order block here. Okay, I explained that the order block is the wick. Okay, it's the wick between the wick of the third candle and the wick of the second candle, the space between there. So this is the space. Okay, this is the space here. Get a grip of it. Let me show you. So this is the wick of the okay, and this is the wick of the first candle. It doesn't matter whether it's blue. So you see the space between here. We talk about that is the order block that must be filled, and as you can see, it has been fully filled here, and we have that expansion coming here, and then we have the same space here. Okay, this is one of them, and if we consider this as a wick, we have another. We can say then, if we consider that as a wick, we have another fair value gap here. Okay, so we have this space to be filled. So what our expect is either price to fill this space and either move up or come to this to fill this one here. Okay, and move up. The first target is going to be this 1.37298, and extreme will target these levels here, 1.38. Okay, so if we come to GU for next week, I'll be looking for buys. So I've given you the scenario. If the buy comes from here, your stop loss is just going to be somewhere here. And if this comes to fill, and even price could maybe sharply come and take out this liquidity level, okay, and order block here, then in that case, when you have your entry, your stop loss is going to be here. But if we have that reversal from here, then your stop loss can be below this wick, and then you target that extreme here. So this is straightforward. I mean, I'm not going to talk too much about it. This is a very straightforward signal that we are getting on the GU. So I personally will only look for buys. Remember, disclaimer, this is for educational purpose only from Clinton and I. It is our view of the market and it is to serve as educational purpose. We are in no obligation giving you financial advice. Okay, so you have to do your due diligence before. Don't use this as a means or as a financial advice to take your trades and invest your money, because we will not be liable for any losses that anyone incur. So this is our disclaimer. Okay, so now let's go to gold. Since our analysis from gold last week, you can see price delivered all the way. Okay, all the way from here, this level, to this level. Okay, count how many pips. Yes, so this was the pullback we spoke about in the analysis that we are expecting, and market just move up that way. So where do we think gold is going to go? Okay, so we have this interesting low. We have another interesting low here, and then we have this here on the 4-hour. And then we have this high, and we have this high here. Let's look at the daily chart and see. Okay, if we look at the daily chart, you can see we feel this here. We talk about this, and now price is what's going up on the daily. This fair value gap, okay, between this 1, 2, 3, you can see the fair value gap on the daily was filled here. So we have this pullback, and now price is here. Okay, so the daily chart is not giving us any interesting things. So then we have to come to 4-hour chart and look at our decision. Okay, if you look closely, okay, we talk about the fair value gap, and you can see there is one here, this wick of this candle here. Okay, and you can see there is a wick here as well. Look at that. So the space in between these two, that is a 4-hour fair value gap. So what I might expect price to do is price to tap into this 4-hour fair value gap. I will look for buy into take out this external liquidity of 5097 for gold. Okay, and then if price close above it, I will look for price to keep going. Okay, and the other way, if price move down aggressively, okay, then because this is the impulsive move here, okay, all this impulsive move on the sell is started from here. So this is what I'm saying. I want price to come and take out that external 5095. Then I want to see a reaction, a sell-off reaction, a little bit correction before price keeps going up. On the second, what price can really do, if price want to react to this level and actually if this fair value gap for hour is not respected and price keep coming aggressively, then I'll wait for price to take out this, possibly come back into the 4594 inside, and then I will look for buys from there to come to this level and possible higher. So if I look at the 1-hour charts, you can see this 516 also, we have a supply here. Okay, we have a supply here. Okay, and then we have this supply here to this this zone which I was talking about, 5092. So if you have your buys, remember that price could react from here, 5018 and 5019. Okay, so if you are looking for buys on a smaller time frame, note these levels and protect your profit from there, or take profit from there. What I have learned in years in the market is that, what Larry taught me also is that sometimes you need to take profit early. If you are not a position trader or a long-term trader and you are just a day trader, I think gold, you can make 50 pips or 100 pips every day easily. And don't be greedy, and you are going to be okay. So the levels are there. Just wait for price and do your own stuff, okay? Can you see also on the 1 hour, we have some other block here because we have some fair value gap here. This is the gap, okay? This is the wick and this is the wick. So the space here needs to be filled. So remember that price could also come down and refill this before we go up, because we have also below that we have some liquidity there, and we have some liquidity also sitting down here. So this is how actually you have to attend the market. This is also a straightforward chart that price is going to do from the 4 hour fair value gap, which we have shown you, or price will move into the other level zones or point of interest that we have shown. And these are areas that price could possibly react to, because they are supply zone, and also we have this as internal liquidity setting 5092. So price could sweep it, then will come down again, grab the external liquidity before price will start moving up again. So good luck, apply proper risk management, and don't blow your account.